the next couple of weeks of these short sessions. So quick and sharp and to the point. So today, Chaz from My House Private Health will be joining us and presenting on a somewhat dry but interesting topic. So throughout the day, please remain muted for the entire session. And any questions that you have will pop up during the presentation, please leave in the chat and we'll address at the end of the presentation. Any major questions we might run out of time for, Chaz will have a look and we'll see if we can address them in the email afterwards. Chaz will also have a handout for this presentation afterwards that he'll send around, and we'll shoot that over to everybody after the presentation, most likely probably tomorrow morning, and we'll take it from there. So as I said, please leave any questions in chat, leave yourself on mute, and it'd also be great if you can turn your video off just so it's not too distracting. And Chaz, take it away and let's get started.
Perfect. Thanks, Adam. All right. So I might leave my video on just so that you can see a bit of a face. It's not too dry because naturally Taxable Payments Annual Reporting is such just a long email, I guess, is how it would normally go. So it's probably easier just to talk in an open forum. Happy, like Adam said, to answer any questions and circle back through, or if there's parts that you don't, I haven't been quite as clear, just reach out and happy to address those after this anyway. So all good. I guess the first point is obviously to acknowledge and thank the Australian Web Industry Association for the opportunity to present here today. As Adam said, my name is Chaz Prezident and I'm a director here at White House Private Wealth. If anyone needs to reach me, my handles are @Chaz Prezident, pretty much on all social media, which is probably handy having such a unique last name. And it's President with a Z. So first up, I'd like to acknowledge the traditional owners of the land and pay my respects to their elders, past, present, and emerging. Obviously, as an accountant, a disclaimer is probably a good place to start. Any of today's content is, just general information. It's really important that if you need specific advice, reach out to your accountant. I'm sure they're more than happy to help and give advice about your specific circumstances. All right, so today we're talking about the Taxable Payments Annual Report. So, and then specifically how that impacts you guys in the Australian Web Industry Association. So as a background, the Australian government wants to make sure that everyone's paying tax. That's pretty much the crux of the issue that they're trying to address. They want to stamp out the black economy, and they want to ensure that businesses are able to compete fairly. So if your competitor is not or is paying a supplier, so one of their contractors, and their supplier isn't reporting the income, chances are they can get that cost price cheaper. And then potentially your competitors can be more competitive in terms of billing rates and things like that. So it is a super important issue, and it's something that as an industry, it's really important that you guys or do participate purely because it is going to make it a lot more level playing field in terms of competing against each other and stuff like that. So I guess we're all familiar with employees. So employees historically were using payment summaries. So that was where the employer or you guys and your businesses were telling the ATO how much you were paying each employee. So that once a year, pretty much you were saying, this is what the employee does. When the employee was going to lodge their tax return, the ATO says, hey, we already know about your information. Let's just focus on your deductions. The reason that they do that is so that no one misses income and doesn't, misses their tax payments on those. So pretty much what then happened was the ATO worked out that the Australian business markets and industries were moving traditionally away from employees and are looking at a lot of contractors to avoid some of the employee legislation, such as super or pay-as-you-go withholding. So contractors is becoming more and more popular amongst a number of industries. So the ATO, or the Australian government, not the ATO, but the Australian government wanted to capture the income reporting and make sure and put in a plan to make sure that they get the data that they need. So what they did, it was originally just for the construction industry because probably they were the naughty kids doing the wrong thing. So for the construction industry, they brought in this new program called the Taxable Payments Annual Report. It's pretty much a payment summary where you list all of your contractors, how much you pay them, how much GST you've paid them, and then the ATO gets all of that and then data matches it to the actual contractor when they lodge their tax return. The system historically has had a lot of issues. It's been around for some time now. As a background, this was the one that they saw in 2017, where 40% of all contractors in the Northern Territory gave the Bunnings ABN when quoted to the people that they were working for. So Bunnings, on their tax return, they saw all of this income that they never got because of all the contractors were just doing the wrong thing, giving the Bunnings ABN. So where that started was in that building and construction services. The program was then expanded. It went into cleaning and courier services. And then on the 9th of May 2018, the Australian government announced the Treasury Laws Amendment, essentially Black Economy Task Force number 2. And that is where you guys get caught under, which is road freight services, IT services, and security and surveillance services. So what that bill means is that from the 1st of July 2019, IT services now have to report to the ATO once a year who they've paid as contractors. So the $1 million question, which everyone asks, is what are IT services? So it's probably something that I would best answer reading directly from the ATO, just to make sure that we're all on the same page, and then step that back through as a practical worked example through what that means for you guys. So IT services includes the provision of expertise in the field of information technologies, such as writing, modifying, testing, or supporting software to meet the needs of a client. So that obviously incredibly vague, very cumbersome in terms of how wide-reaching it is. And then a lot of confusion around, well, what happens if we do multiple different fields, and one of those might include something that would be deemed to be an IT service. The ATO goes on to note that IT services may be performed on site or remotely through the internet. They include services that support or modify the operation of hardware or software, such as planning and designing computer systems to integrate computer hardware, software, and communication technologies. Simply using IT hardware or software in your business to provide a service doesn't make you a business provider of IT services. So what that final paragraph means is that, as an example, we're a Gold Coast-based accounting firm, support our clients nationally, and we use cloud-based software such as Xero to help us facilitate our interactions with our clients. Just because we use software as an accounting firm doesn't mean we're in the business of providing IT services. It's rather that we just use our IT software as a support of the actual service that we're providing. So where to start? Naturally that what the ATO has in terms of who reports is quite limited. So I guess what we suggest for our clients is looking at what is on the label of your tax return on label 2. So if you look at what your last tax return that you lodged with the ATO, in label 2, there's a question that says industry description and code. What that means is on your very first question on your tax return, the reason it's so early is because the ATO wants to compare you against your peers in what you feel is your best foot forward in terms of industry or service. So what I would do practically is suggest going back to your tax return, having a look at what you've reported to the ATO as your primary industry, and using that as the first point of call. Now, if you have reported, now we're talking about codes. So the code, it's an ANSIC code, which is the Australian and New Zealand Standard Industrial Classification Code. So that's just essentially Australia and New Zealand have harmonized all of the industries and given them a 5-digit code to report through. ANSIC code 7000 is computer system design and related services. When we look at that code specifically and the examples of what the IT services include, it's computer facilities management, computer hardware consulting, computer network systems design and integration, computer programming, computer software consulting, internet and web design, which is the blend for those marketing agencies out there, IT consulting, software development, software installation, software simulation and testing, systems analysis, and technical support. So ANSI code 7000, again, still incredibly vague. It's quite a wide net that it casts, but that's the industry code that the ATO wants people to report their taxable payments annual report under. They have given specific guidance of what is not considered an IT service under code 70,000. IT services that are not included are things like mass producing computer software, leasing or hiring computers, or other data processing equipment. So that's more that you're then a hire company rather than an actual IT service. Providing data processing services or computer data storage, or installing computer cables. Now, other ANSI codes that people report under, so when you go back to your tax return, you might notice that you report under code 69,400. That's an advertising service. That's for people or businesses that sell advertising space in both printed, radio, and television broadcasts. Advertising agency services, advertising material preparation service, aerial advertising service, direct mail advertising, sample distribution service. So it's specifically it's advertising related rather than IT related. So if you report under ANSI code 69,400, as an overview, it would be found that you don't need to complete a taxable payments annual report. However, the ATO loves, or our Australian tax system loves a good however. If your business provides multiple services, you still can be deemed to have to fall under this legislation and complete a taxable payments annual report. Now, the rule is if 10% of your income is deemed to be, 10% or more of your income is deemed to be an IT service, you would be found to be required to lodge the taxable payments annual report. So I guess the foundation of this is really understanding your own business and what exactly your contractual terms with your clients are, and whether these services that you provide are an integral part of the actual business itself when they fall under this IT services realm, or if it's an ancillary part, like what our use of software is for when we're providing accounting services with our clients, it's ancillary to our business. So that's why we're then excluded under the taxable payments annual reporting system. So examples to help you better understand what is a primary or an integral service or an auxiliary or ancillary service, think about restaurants who deliver primarily. Restaurants who deliver primarily are a food service. They provide food for their customers. Just because they deliver that food to their customers doesn't necessarily make them a delivery service. Their taxable supply would still be the preparation and supply of food, compared to two separate transactions, which would be the supply of food and then the delivery. The delivery is just an ancillary service of the preparation and supply of food. Similar industries are things like florists that offer delivery as part of the preparation and supply of flowers. So it helps give you an understanding that the ATO is not trying to genuinely cast a net and just make everybody have more red tape or compliance. What they're really trying to do is just target specific industries that have high contractor engagements, and then just really ensure that the income is reported through those contractors. What is reported? So if you're comfortable that, and we'll come back and answer any questions, but if you're comfortable that you've made a determination, you say, part of what we do, web design is probably what I would imagine a lot of you will, as members of the Australian Web Industry Association, will fall part of or fall victim of is that if 10% of your income is derived through the production or preparation and production of websites, you will then come under this Taxable Payments Annual Report. And then when you come under that Taxable Payments Annual Report, you're then responsible for the information that you provide. So the actual Taxable Payments Annual Report, TPAR, comes in 3 parts. Firstly is about your business, so who you are or what your business is, your ABN, your address, those details. Secondly, who you paid, their ABN, phone number, address, how much gross payments that you've paid them, how much tax you withheld if they fall under the tax withholding, or how much GST that you've paid. Once you've completed those details for every contractor on your books in that period, 1st of July 2019 to 30 June 2020, you sign off and you do a declaration saying that you're responsible for the information that you provide. I think the really important thing to note in that legislation is that you still have to include overseas contractors. And this is probably a lot of the confusion that we have discussions with our clients, that they feel that just because you pay an overseas third party, whether it's through something like Airtasker or something like that, that you don't have a responsibility to report that information. The construction and the facilitation of the Australian income tax realm is that if you're paying a supplier, the responsibility is on the actual business who's making the payment to make a determination if they're meant to withhold tax from that payment or not. Obviously, that's something that is quite commonly misunderstood. So in an ideal world, when you're paying your overseas contractors, you're actually meant to get them to do a declaration on an approved form, which is readily available on the ATO and we'll include in our handout from post this conversation, that they're making a declaration to say that you're not responsible for withholding tax on them. They're exempt from that for a particular reason. And there's a range of reasons that come under that on that form. And it's just a checkbox. They provide that declaration back to you. And that's when you're actually meant to release the payment. Simply the provision of an invoice to your business where they haven't quoted their business ABN, you're meant to withhold tax from that and then pay them the residual and say pretty much, hey, we've paid this amount of tax to the ATO on your behalf. It's up to you to go collect it. So that really is meant to trigger a conversation between your supplier and the ATO itself. The actual withholding form is so much easier, and I would actively suggest, if you haven't done it, really great housekeeping to go back through and just get those records tidied up and just have them on your supplier cards ready to go, so that if anyone ever asks you, you've got that production there. What isn't reported? So you're only actually reporting to the ATO what payments were made in cash. And now that's a really crucial part of the taxable payments reporting scheme, is it's all reported on a cash basis. So if on the 30th of June, one of your suppliers issues you an invoice and you're going to claim a tax deduction because you're entitled to under your accounts, just because they've provided that tax invoice to you doesn't mean that you actually report that data to the ATO through your taxable payments annual report. Simply, it's just the ones that you've actually paid in that period. Other payments that aren't included are things like materials. So obviously if you're buying hardware or things like that, they won't be reported. It's really just to capture genuine labor. And it doesn't also include incidental labor. So incidental labor is probably more in the construction industry, where where it's quite common. We're going to need, quite a large supply of plasterboard. Please deliver it on site, and they charge you an unloading fee or something like that. Now, those fees where it's incidental labor, where the labor is only there to support the provision of the material, they wouldn't be reported either. In the event that there's a blend, you report the full payment. So essentially, you're just giving transparency to the ATO about who you've made the payments to, so that they don't come to you and say, we're expecting your profit to be quite high, or whatever it is. Just helps them get some clarity about where the actual transfer of wealth is occurring in Australia. The taxable payment annual report, we're coming up. Today is the 12th of August. It's due in a fortnight, so just over a fortnight, so the 28th of August. So this is the first one. It's not uncommon for the ATO to give a little bit of leniency in the first version of reporting, provided that the taxpayer is making it a genuine attempt to, provide the information that's being requested. How do you report? So there's three options. You can either do it through your accounting software, things like MyOb Essentials, which is online, Xero, and QuickBooks Online. They can do it electronically through the actual software itself. Alternatively, you can reach out to your tax agent. They'll have the ability to do it through their software. Or you can jump on the ATO's website, and there's paper forms that you can order. They'll post them out, handwrite them, post them back in, and the ATO will process it when it's received. So there's a few different options that you can do to actually get the information across. It's really about, and especially for the Australian Web Industry Association, understanding, do you provide IT services? So that's a really comprehensive and cumbersome concept, I guess, or tried to make it as practical as I could. Specific questions, Adam? Was there things that popped up in the chat or anything like that I can go back through and address?
So I noticed Patrick Jackson's joined the chat here, which is great. He's one of the people that kind of triggered this Lunch and Learn. So thanks very much, Patrick. His original question was around relevant services as a reportable payment. And his example that he gave was a graphic designer providing services for a web development.
Yeah.
Is that considered a relevant service specifically related to the IT services?
Okay, great question. So you would flip it back between, are you the business who's making the payment to the graphic designer? If so, it's not so much about the provision of or the use of the graphic designer. If it's your business, it's your relationship with your client. So what is the graphic designer, or what is the service that you're providing to them that would trigger whether you're there to, whether you're caught under this taxable payments annual reporting system or not. In the event that you're the actual graphic designer itself, the relevant service would still come back to the service that you're providing. In the event that the graphic design work is for the preparation of a website, it'd probably be more an understanding of the service that you're providing specifically. If it's providing a graphic design for the purpose of advertising, it would be considered that your industry code would be an advertising service or associated with advertising, compared to the actual web design. So unfortunately, the question is going to be best answered with "it depends," classic accountant answer. I would definitely suggest you start with that first point on your tax return with, if you're the graphic designer, what is it that your business is? What are the services that you provide to your clients? In the event that you're using software simply to produce an outcome, you don't necessarily have to get caught under this scheme. That being said, if you're genuinely doing things that are for the production of a website, you're producing graphics specifically for a website or a software, it would be likely that your relevant service would get triggered under the actual 70,000 ANSIC code, which then would mean the graphic designer would be required to lodge. So great question. I think it's going to come down to the specifics of the graphic design business. In the event that 10% of their income is provided in this niche of web design, then they might not have to report. I would say wholly probably yes. I would think that they're going to be caught. And if you're the business that's using a graphic designer and you're producing websites for clients, you are absolutely, there's definitively captured under this system.
Okay, so that's great. So I think that's the last bit where that Patrick was after, was if the graphic designer was engaged by me, for example, and I engaged his consultancy services to develop something, and I'm an IT services based business, I would have to report that graphic designer's contract in the TPAR, correct?
Correct. Yeah. So, and then if it's you, it's because that's the income that you provide. Now, reporting that information and naturally, this whole system is just designed so that when the graphic designer then goes to lodge their tax return, they can't say to the ATO under the self-assessment system, hey, ATO, we've only earned $10,000 this year. If under your business, Adam, you've paid them 20 grand, the ATO will go, well, we know just of Adam's income alone from income, his expense to you, which is your income of 20 grand. So there's instant data matching available there. It's just one of those things that I would never suggest to anyone underreporting income. The amount of information that the ATO does collect and has access to, it's such an easy audit for them these days. And that's part of this system, is to try to get more information to the ATO, so that when you lodge your tax return, they have a better understanding of whether it's true and correct or not.
Okay, cool. We have couple of quick questions. We have 5 minutes, so we'll get through these questions now. And Patrick, if we didn't fully answer your question, Chaz's details will be passed around, so you might be able to flick him a quick email just to make sure we have answered that.
Good. I'll just chime in there. So I guess my particular niche is with social media content delivery. So I guess it comes down to sort of what the ATO codes are, as you were saying there.
Yeah, absolutely. Start with the ATO. So so you're the graphic designer, is that right, Patrick?
Well, yeah. So I'm in an odd spot that I'm sort of the end of the food chain. So quite often I'm going to be the last contractor in the chain.
Sure.
So it's people above me that if I'm working for someone that's doing IT, they've got to put me on their TPAR.
Correct.
But other people might be engaging me for something else and don't need to. So.
Correct.
I'm one of the team members for Joomla Australia. So we've got 57 people in our Slack that are all similar operators to me. And that's where sort of the question grew. So people couldn't answer it the other day.
The good news for you, Patrick, is that in the event that you have this section of income that's coming from someone who does report to the ATO, the ATO will have that ready to go. They're not going to trigger an audit if you report more income than that, obviously. Like if you're receiving income from a second source, they're not going to say, hey, like we only knew about this. We're going to, actively target you for an audit or a review of your tax just because the data doesn't match exactly. What they will do is it's really to capture those people that are getting some income and reporting very little. Like it's really something that is, and they've been quite brutal with how far reaching this is. It's simply to give some understanding about the income from business to business. That's
because where it's new for our industry, it's been in the building industry for years.
Correct.
And it's to catch the cash economy, I would imagine.
Spot on. So it's the ones where the industry's first was building and the building net is so wide reaching. The legislation, when it was first proposed, I think it went back to 2012, was the first year of suggestion that this was coming in. It was pretty much, do you add or modify a structure?
Yeah.
And it was like, how do you answer that other than yes, if you're in anything, building related? It then transitioned to courier and some of the other ones where it's high volumes. And unfortunately for IT services now, because of things like, and it's probably a reflection of the evolution of technology, things like Airtasker and this whole, Airbnb, peer-to-peer, side hustle concept.
Yeah.
That's what is then triggering this to the ATO to say, hey, hang on a minute. Are you actually, carrying on a business firstly? And then secondly, are you, reporting this as income? Because we don't want the black economy to exist.
I'm going to interrupt there. Thanks very much, Patrick. We're going to move off to a couple other questions, but I will take your time on that. So we've got 3 questions that we'll shoot off. First one from Oliver. If we were engaging IT providers through a tool such as Upwork, how would that work?
Yep, great question. It's still who's providing the tax invoice. So the responsibility for you firstly is about, are you entitled to claim Upwork as a tax deduction? Naturally, as a business, you're going to say yes, because you don't want to pay tax on that extra income. So then refer to the actual invoice that you receive. Now that invoice, someone has to provide you with a tax invoice for you to be able to claim that as a deduction, and just double check, is it Upwork that's providing the actual tax invoice to you, or is it the actual subcontract underneath Upwork or the freelancer underneath Upwork? In the event that it's the freelancer underneath Upwork, you would send them that payment withholding declaration if they don't give you a tax invoice with a valid ABN. If they give you a tax invoice with a valid ABN, that's all you simply report is that information. So really great question. It's going to come down to who's sending you your tax invoice. And if you're not getting a tax invoice, I would actively be reaching out to your provider of that service for a tax invoice. And it would be likely, I imagine, that they will provide you with the tax invoice from their international head office or something like that, I would speculate.
Okay, thanks, Chaz. We got the next question here from Sarah. Hopefully this is a quick answer. She added her TPAR to the ATO and accidentally got the amount wrong. She doubled it, in fact. So she did a revision, but looks like she now has 2 entries. Does that sound normal, or does she need to contact the ATO?
Yeah, so firstly, it doesn't sound normal, no. Unfortunately, it means that you do need to contact the ATO. Their service standard, I think, is 20 or 28 days for them to remove that. Not uncommon with single touch payroll for those that have employees as well. Very quick conversation with the ATO over the phone. They've got a hotline directly for this if you follow through their prompts. Hey, I've accidentally, it's doubled it. It hasn't revoked it. It's because when you would have lodged your revision, there's an indicator on it saying, is this an amendment? And if that box isn't checked or the ATO doesn't process it as that box is checked, they'll add a second one underneath. So great question. Yes, it can be fixed, probably best from a phone call. In the future, in the event that you do need to make a revision, just check that box that says it's an amendment and it will override the first one.
Excellent. All right, last question for the day, and then we'll wrap up. Gay has asked, Gay employs a virtual assistant who provides a range of services for Gay. It doesn't matter what those services are, so either admin or social media, etc. If I'm under the code of 70,000, do I report all payments to her?
Correct. Yeah. So provided that she's a provision of labour, which as a contractor, that's what they are, and you're either that ANSIC code 7000, or you've reported a different code, but you still have more than 10% of your income coming from that ANSIC code 7000, then it would be Gay's responsibility to do the TPAR report, and she would include those payments. Now, because it's a virtual assistant, and if that virtual assistant's overseas, again, I'll include in the handout a really simple, it's just a declaration, it's a form, they just get her to sign it. It'll just give you the confidence that if at the end of anyone was ever to ask for a review, you're entitled to claim the tax deduction as well, which is probably the most important thing. Often the conversation we have with our clients is not so much about the income for their contractors, it's more about making sure their tax is low for their business. So naturally, you just don't want the ATO to be able to reverse your entitlement to claiming a tax deduction.
Excellent. Thanks very much, Chaz. Okay, that's that. We're going to end the session now. As we promised, we're trying to make these sessions extremely quick and bite-sized, hence lunch and learn. Yeah, I punned. I'm sorry. And then after this, we'll send around, there'll be a copy of the video to review, especially for some of the latecomers can definitely catch the overview Chaz gave at the start. And also Chaz will be providing a handout that we'll hand out to all members from AWIA, just to get an understanding of TPAR, and also Chaz's contact details. He can answer any brief questions, but as he mentioned, it's best to go back to your current accountant. Thank you very much for your time, Chaz. Really appreciate it. Thank you everybody for jumping in and joining us for our first Lunch and Learn. We are hoping these are going to be a regular occurrence. So if you do have an idea for a Lunch and Learn topic, let us know, and we'll try and find the right people to give the right information. And also, if you have something to share with the greater audience, please also let us know. So thank you very much. Enjoy your afternoon, enjoy the rest of your lunch, and we'll chat soon. Thanks.
Thanks, guys. See ya.